So you're a higher earner in the UK. Well, the upcoming tax year, 2025-26, is shaping up to be a real squeeze on your finances. But here's the thing. With that squeeze comes an opportunity. In this discussion, we are going to break down the absolute key strategies you need to know to get your tax situation optimized.
So let's dive right in. Now, this entire discussion has been arranged by the experts over at Pro Tax Accountant. They are a top UK firm, and they specialize in making these kinds of complicated tax issues crystal clear for people just like you. I want you to look at this number, 400,000. It's a massive figure, and honestly, it's right at the heart of everything we're talking about today. Keep it in your head, because that's how many new people are expected to be dragged into the 40% higher rate tax band in the coming tax year. It's kind of the perfect storm, right? Tax thresholds are frozen, but wages are going up. So hundreds of thousands of us are suddenly finding ourselves in a higher tax bracket, even if we don't feel any richer. And that's the million-dollar question, isn't it? Are you one of them? Because whether you've just tipped over the edge or you've been a higher rate taxpayer for years, understanding these rules has never, ever been more important. All right, so let's get to the bottom of the problem. It's a concept called fiscal drag. And you know what? It's been quietly tightening its grip on the finances of millions of people. Take a look at this. Your eyes should go straight to that band between roughly £50,000 and £125,000. That is the 40% tax zone. Fiscal drag is what happens when these numbers don't move up with inflation. So as you get a pay rise, more and more of your money gets pushed into this higher bracket. You're paying a bigger slice of your earnings in tax, even if your lifestyle hasn't changed one bit. But, and this is a big but, it is not all doom and gloom. Not at all. Think of the tax system as giving you a toolkit, a set of allowances that are basically your first line of defense. And knowing how to use them, that's the game changer.
The foundation of this whole toolkit is your personal allowance. It's simple. £12,570 that you can earn completely tax-free. But for higher earners, there is a very, very sharp catch.
And here it is. This is that tapering effect. The second you earn over 100 grand, that tax-free allowance of yours starts to shrink. For every £2 you earn over the limit, you lose £1 of the allowance. By the time you hit £125,140, poof, it's gone. This is a massive tax trap that catches so many people out.
And it's a similar story with your savings. A basic rate taxpayer, they get to earn £1,000 in interest tax-free. But you, as a higher rate taxpayer, your allowance is sliced in half, down to just 500 quid. This shows you exactly why things like ISAs become not just nice to have, but absolutely essential. Okay, let's talk about a really simple tool that gets overlooked all the time, the marriage allowance. If your partner earns less than their personal allowance, they can literally transfer a chunk of it, £1,260, over to you. Look at Priya and Sanjay. This one simple move saves their family over £500. It's a quick win, and it's well worth looking into. All right, now for the main event, let's talk about what is, without a doubt, the single most powerful tool in your entire tax planning arsenal, your pension.
And I am not exaggerating when I call it a secret weapon. For any higher rate taxpayer, making pension contributions offers a level of tax efficiency that nothing else comes close to. It can literally slash your annual tax bill. So how does this magic work? Well, it's a three-step dance. You put money in your pension provider automatically goes and claims 20% back from HMRC and adds it to your pot. But, and this is the bit everyone misses, to get the full 40% benefit, you have to actively claim that other 20% back yourself, usually on your self-assessment tax return. Let's make that real with Aisha. She puts £10,000 into her pension. Instantly, it gets topped up to £12,500. Then she does her tax return correctly and boom, she cuts her personal tax bill by another £2,500. Think about that. Her 10 grand contribution actually only cost her 6 grand from her own pocket. That's an incredible return. So we've seen the problem. We've looked at the tools you have to fight back. Let's pull this all together now into your action plan for the year ahead.
Right, here are the absolute essentials. First, you have to watch those income thresholds like a hawk, especially that £100,000 cliff edge for your personal allowance. And remember how tiny the allowances are for savings and dividends. Second, use every tool you can, like the simple but effective marriage allowance. And finally, the big one, if you are contributing to a pension, for goodness sake, do not forget to claim that extra 20% relief. It is the single most valuable step you can take.
Look, if your head's spinning a little bit right now, that is completely understandable. The rules are complex, they're fiddly, and getting it wrong can cost you. This is exactly where getting some professional advice can make all the difference, just to give you that clarity and peace of mind. And that brings us right back to the beginning. To make absolutely sure you're getting the most out of every single allowance, the team at Pro Tax Accountant really has the expertise to guide you. All their details are right there on the screen. So the question for you is, with hundreds of thousands of people about to pay more tax, will you be one of the few who plans ahead to pay less?